may happen. And if you look at what I got on bonds today, this is my current bond trade. Look, a 4 contract on the UB on NinjaTrader, sitting on $1,600 at the moment. $1,600 profit. $1,600 profit on bonds. When you look at that trade there, I was looking at this bottom edge here and I was thinking to myself, that's going to be a buy trade on a dip here, surely to goodness. That's got to be a buy trade on a dip. And you look at that and say, well, but you know, what was the story behind it? What was the idea? Why would you buy that at 11 o'clock this morning? Why would you be interested at 11 o'clock in getting some long bonds? Well, it's not a single thing, is it? It's never going to be a single thing. It's going to be a multiple element coming into those trade areas. So if we look at 11 o'clock, for example, if we look at slightly before 11 o'clock, so I'm starting to build a picture from my trade log today, right? So what do I start seeing in bonds? Stir traders are expecting rates to fall. 10.55, right? A strong drive lower. Bond ZB traders are going to try and bid into the drop at significant lows. Well, that's the London low right there that I'm trading at 23s, right? So I'm already at a significant low at that price. Agreed? But what else catches my eye? Oil offers into liquidity pools. Oil commodity funds starting to offer at 10.50, right? So I'm starting to see some sell side on inflation, correct? Agreed? Is it there? Is it visible? So as a bond trader, I'm paying attention to the sell side inflation story building as well. It's visible. It's part of my story. So then I stirs trader expecting rates to fall. Well, that lines up with that sell coming in, right? That lines up with this oil sell coming in at 10.50 here. And then I start seeing another stirs trader expecting rates to fall. And then I see this oil entry at 11 o'clock telling me that if oil goes above 84.13s, that JRT is looking to sell it. That's at 11 o'clock now, right? And then I see this trade log entry here saying crack offers. So in other words, they're going to start selling the crack spread. And then I see that there's a trade log entry from JRT telling me if they take bonds down here, look to buy it at 11 o'clock. Look to buy it at 11 o'clock. What did they do? What did they do at 11 o'clock? I've chopped off the time, guys. My apologies. What did they do at 11 o'clock? You couldn't make it up. At 11 o'clock, they took the price down. What did I do at 11 o'clock? I bought it. And I've taken a 4 lot for $1,500 on that buy trade at 11 o'clock. Look to buy it at 11 o'clock. Can I make it any easier to get long there? What do you think? Outside of me stretching through the computer screen and pressing your buy button, can I make it any easier than that? Is that not the simplest thing you've ever seen? It's crazy simple, right? I just read the trade log. I just read the time and sales, and I built a picture around it. And because I was able to build a picture around it, that's what I got. Just let it ride. And unless I get a big change in the narrative, I'm going to leave it running for as long as I possibly can leave it running for, right? So when we see these little clues, when we see all of these little storylines, all of these narratives, and we start building out an idea around what we're seeing, as I said, I'm not telling you it's going to be a buy for me because I need to still have additional proof that this is what is the deal. This is where the deal's at. But this is what I'm doing. The trade log is an incredible tool that is being massively underused. And we know it's massively underused because we can obviously look at users. We can look at people who are logged in. It's a fraction. It's a fraction of the people that have access to it. A fraction. So we know that it's not used. And yet there's thousands and thousands and thousands, tens of thousands of dollars today that are just given away because nobody paying enough attention to these triggers. I don't get it. It's probably the best retail indicator in the world that's ever been developed. And I don't say that lightly. But I've looked at a lot of indicators. I've looked at thousands of indicators. And I think what we've got there is the best indicator you've ever seen. It's not every trade, it's not every deal, it's not every clue, it's not everything that comes through, but it gives me a heads up. It gives me a possible story that I then build the rest of my day around. And that's why people don't use it, because they've got to put in extra work. But if they put in the extra work, guys, it's made me fortunes today. It's made me an absolute fortune today. Just taking the individual trades and the individual entries, the individual elements that I want to play against. I don't take every single one of them. If I did, I'd be probably have died of exhaustion by now. But I watch the story when I need to watch the story. I pay attention to everything that comes through, and I see patterns emerging. I see certain things agreeing, like the oil starting to agree with that long bond trade. And I think to myself, okay, let's check that out. I want to check that out for validity. I want to check that out for my other parts to the storyline. And when I check it out against the other parts to my storyline, I see the opportunity and I trade the opportunity and I make money on the opportunity. It's not that difficult. So when the trade log agrees with my structure, when the trade log agrees with my order flow, my tape, my delta, I'm good to go, right? You've got all the clues you need to make a lot of monies. And if that's the case, I'm in pretty good shape. We've had a very, very, very good day so far. Very good day. And all I've traded today, literally all I've traded today is the trade log. Because I was wanting to develop an idea that if somebody uses a trade log, could they make money? Just using trade log signals with a bit of verification from the other things that you're looking like order flow. And today the answer is a resounding yes. A resounding yes. If you put it together properly. No one trigger is going to be a buy or a sell. It's part of a story, as every scenario is part of a story. We'll be developing out those scenarios again this afternoon. It seems we still have a lot of work to do to get people to understand it properly. So we'll do that this afternoon, some stage. Anyway, welcome in, guys. Let's get through the numbers quickly. I have no assistance today, so I'm going to be very limited in the room today, guys. Very limited. But let's get through today's scenario. It's Tuesday, the 2nd of July. It's an interesting day in terms of data. We've got Powell speaking at 14:30. But Eurozone inflation came in a little bit hotter than expected at 2.9%. Now, I was hoping it was going to be colder, because obviously that would have given us a very easy trade on Forex to take advantage of. But because of what we saw, I didn't have the trade, and my Forex trade didn't develop the way I was hoping. As it turns out, it made money regardless, but it wasn't for me on this occasion. So this was the trade I had on Forex, just for completeness. Last night I told you I was interested in CAD Yen. I gave you a price I was interested in. I was looking at around about 117.30 for a buy trade on CAD Yen. And you can see what's happened in the London session. Somebody's came in the overnight session, London, and taken the market bid before we were able to get our buy trade, because obviously the perfect scenario here would have been to run the sweep there. And I would have been probably keen to buy this if we just got down into the 40s, and they've taken the market bid at that stage. Well, you can see I didn't want to pay 55 when I was trying to bid 30. It's too far away, isn't it? It's got too much out of it. So in that sense there, I'm only a shred away from that prior high here at 80s. So if I was to pay 40s or 55s, I don't think I've got enough in it to justify my entry into that as a bit of business. But you can see it worked out for whoever took the trade. If Reeve was a Forex trader, I'd probably blame Reeve at this stage, but he's not a Forex trader, so I can't even blame Reeve on this one. But somebody liked it enough and they've taken it. Fair enough. Wasn't for me on this occasion. Left it alone. And unfortunate. Just unfortunate. But, it's not every day we get the trade. It's not every day the trade comes to us. We sometimes have to go to it if we're going to get the business done. But on this occasion, not quite the case. Anyway, let's get through, as I said, the data that we are looking at today. We had a busy day yesterday, obviously, lots of stuff. And it's always a good idea when you finish your day or when you start your next day. It's always a good idea just even to scroll through the previous day's data to get a feeling of good or bad or indifferent. And you're just getting that view of how many reds there are. And you can see there's a lot of red numbers in yesterday's market, isn't there? So we had a red number in construction spending, we had a red number in ISM manufacturing PMIs and prices. We had a red number in UK lending, we had a red number in London money supply, we had a red line in manufacturing PMIs. We had some red line in some Swiss manufacturing PMIs. So there was a lot of red through yesterday, a lot of kind of negativity. And obviously that's going to start weighing on hike considerations in terms of central banks. And if there's been a hike before, that means that they've got to reprice that back to no change. And obviously that's something that you're starting to pay attention to, is did they reprice the central banks to no change? And that's what we're looking for, those types of repricings. When we look at the central banks just now, of course, there's a lot of them that are around about the 50%, right? So because there's a lot of them around about 50, 60%, it doesn't take a lot to move the needle from hold to hike, or from the needle from hold to cut, because we are sitting at the 50%. Now, the only ones that are in the 90s are RBNZ and the Fed. They are 100% on hold at 92% just now. So obviously that's something, again, that we're paying attention to. The Aussies have gone back on hold again as well, and that's okay. That's absolutely fine. So moving into today's markets, Tuesday the 2nd. Sorry, guys, let me just update this. It's not been updated since I was on it this morning. Bring it across. Tuesday the 2nd, you can see that we got the Eurozone flash CPI numbers coming in a little bit hotter at 2.9%. Forecast was 2.8%. So 2.9%, back in line with the prior. Not particularly a great number for equity traders to be buyers into, is it? This would have been a number that I was keen on the euro dollar long positions, of course, but again, that wasn't one of my particular markets that I was paying attention to, was euro longs. But if we'd got a disappointing number with the French elections as well, I'd have been keen to maybe sell euros against something, and we could maybe have taken a bit of a position, maybe on euro yen or something like that, depending upon what else was happening, or euro CAD if the oil price was staying bid. Anyway, no trade for me on Forex. As we move forward for the rest of the day, of course, we're left with Lagarde speaking at 2:30, Fed Chair Powell speaking at 2:30 as well. JOLTS job openings at 3 o'clock, expected at 7.9 against a prior of 8.0. And that's pretty much it for the day, is that JOLTS job. So 3 o'clock today, guys, 3 o'clock, nothing at 1:30. So 1:20, which is just through for bonds. Then we've got 2 o'clock for the metals and oil, 2:30 for the cash, and of course, JOLTS at 3 o'clock. So that's your schedule for the day. We can talk about scheduling through the various sweeps, the various narratives. And of course, it's always a good idea every day to debrief the trades from yesterday, debrief what you saw, get your macro trades on the charts, think about your hourlies, your dailies, think about the type of market you're positioned in, think about how they managed the overnight liquidity. What did they do with overnight and London liquidity? Coming into New York, it's very important to have that story clear in your own mind, so that when you make a trading decision, you're making it with all the evidence in front of you. So I'm going to grab some lunch, and then when I can, we'll get started this afternoon. Oh, Reeve, you can be blamed for everything, because I know that for a fact, because my wife blamed me for everything. So I think you can be blamed for everything.